Hi everyone. Today markets pulled back a little bit, so let's get into the data. Then we'll look at the charts as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So looking at fear and greed, we did see a step up here today to 78 from 77, so very slight there. And we are still seeing greed pretty much across the board. We did see breadth tick up a little bit into today's session. We'll take a look at that on the charts as well. Then we'll look at the put-call ratio as well as market volatility, but you can see put-call ratio, they're saying extreme greed, volatility neutral, but we did see a slight step up there. And then safe haven demand and junk bond demand, both in extreme greed. Overall, with the greed across almost all indicators, that is a little bit bearish in my opinion. And then moving over to seasonality, it seems like we're just about a step ahead in everything. So we got the rally on Friday that we were supposed to get into today's session, and then we got a little bit of a pullback in today's session, which should lead into sideways chop according to this chart through the rest of the month. Could give you some ups and downs, but generally flat. And then you got the S&Ps and the Russell 1000 headed lower into the end of the month, but generally flat through this period up until about the 22nd, 23rd of this month. Moving over to earnings just for a moment, you can see Federal Realty did miss on the top line, but beat on the bottom line. Avis also returning very strong earnings, $7.10 versus $4.50 expected. And then I'm still waiting on that waste management number. We'll take a look at that in tomorrow's video, but definitely going to keep an eye on that one. And then we have Coca-Cola, Airbnb, Moody's, Marriott, Global Foundries. That's going to be interesting going into tomorrow's session. And then for the pre-market on Wednesday, you do have CME Group and Cisco after hours. Moving over to the economic calendar, you can see New York Fed consumer expectations for inflation at 3% for 1 year from now. That's pretty high. On current projections, you would want it to be a little bit lower than that. Pretty interesting to see that considering that the Fed is considering cuts. And then looking at tomorrow's data, we have CPI in the morning. That's obviously going to affect markets. I think based on the estimates here, they just seem a little bit too optimistic. If we get them, absolutely markets will go higher in my opinion, even if we meet expectations with how optimistic these are. If they come in even lighter, then we'll get a rocket ship. But I think there's a chance they could come in a little bit hot, and that could shake markets considering how optimistic markets are with the potential cuts later in the year. And then looking at Wednesday, there's basically nothing on the calendar. So CPI for tomorrow, super important. Moving over to Max Pain, you can see it ticked up a little bit to 480, still well below current price at 542 cents. Total options almost at 4 million. Put call ratio went up a little bit to 2.23. And look at these massive call walls at 490, 495. 501, top of the puts right now, 501, 502. So makes sense we're a little bit below that. Could dip all the way down to 490. That would be pretty substantial. 490 here to 495 seems like it would make sense between those two levels, at least to shake out that biggest call wall here at 495. Moving over to the charts, starting off with the S&Ps here, you can see we rallied up pretty aggressive. Looked like we were going to potentially break this trend line, and then one candle held above, and the next candle we broke down pretty significantly. We're falling pretty strong after hours. It's a little bit ominous going into the CPI. Maybe somebody knows something. They're selling off into that risk event. Got the 55 EMA sitting at 499.44, and then you can see it here on the daily chart. Overthrew that trend line, pulled back, closed below it. So that's clearly resistance, momentum breaking a little bit lower. So might see at least a short-term dip here down to the 9 EMA, 494.62, and then you got the 21 sitting all the way down at 487.89. So definitely risk to the downside, and that does not look good in terms of a daily close for the candle. Still have a level at 500, and we are still technically above it, but if that breaks tomorrow, that could be quite weak as well. Of course, that'll be dictated by the CPI reading. Moving over to the NASDAQ, very similar thesis. Tried to break out above that previous high. I had a level here at 483. Got above it for a little bit, broke back below it, and then continued lower to that 55 EMA on the hourly chart. That level is 434.47. You can see we're below that now after hours. Momentum breaking lower, RSI weak. And then looking at the daily chart, similar thesis to the NASDAQ. Didn't test the trend line all the way up at 440, but it did hit that level, overthrew it briefly, and then broke lower. So momentum stepping down, RSI right at the SMA. Does seem like we're getting at least a little bit of a pullback, again, depending on CPI. And then moving over to the Tasty charts here on the NASDAQ just for a moment, I did want to highlight that we hit that third ATR band on the daily chart and then pulled back from it. So that seems to be acting as resistance. Similarly here in July was resistance as we grinded right along it. And then similarly here overthrew it, ended up breaking back down in the mid-range. That mid-range is currently trading around 424. So that would give you about $11 of downside if we did break back into that mid-range. Just something to keep in mind. You can also see momentum. This is a volume weighted MACD that is also breaking down. So there's definitely some sellers in the market waiting to see how this pans out. It doesn't work quite the same way as the regular MACD. You can see as we were rallying up, you're still in positive momentum. Markets were still going higher during that period. And then you got the dip low. And that crossing point was actually the bottom. And then you got a rally. So just keep that in mind. This chart is a little bit different. It doesn't work quite the same way in terms of just using price action, but critical resistance here at that third ATR band on the daily chart. Moving over to the Russell and the Dow, the Russell had a very different thesis here. You can see the Russell was moving much higher throughout the session, pulled back slightly in the midday, but it held up very well. So the Russell, top performer on the day. You can see that big break, took out the trend, took out the level, got all the way up into the 203.50 area and then pulled back slightly. Let's look at that on the daily chart. Look at these candles here. 3 really strong candles in a row, 1.5%, 1.6%, and then another 1.8%. So they're actually growing in strength as it goes higher. Momentum bullish, RSI bullish. So this looks very strong. This almost looks like a head and shoulders here as well. Left shoulder, head, right shoulder, or you could argue low, higher low at the 55 EMA, and that's clearly breaking higher. So looking to see if it breaks above this previous level, around that 205.30 level. Right now it looks very bullish. And then looking at the Dow, it did have a new high close. We closed at 388.11, but let's look at it on the hourly chart here just for a moment. You can see we did have a similar pattern to everything else, rallied aggressively through a wick and then pulled back. And it is holding just above that level I added here at 387.77, and we'll see if it can hold that level tomorrow. If it breaks here, then I would expect a similar move to the SPY and the NASDAQ, where we start to break into these lower levels back down to 385 or so. Moving over to Apple and Tesla. So Apple fell throughout the session, didn't really show any signs of life here. One big wick up almost to that 190 level, almost to the Friday session highs, and then it pulled back throughout the session and selling off even more. So that looks quite bearish, continues to sell off from those resistance areas, 55 EMA. It is below all the EMAs and SMAs here on the 4-hour chart. Let's look at it on the daily. So we did close below the 9 EMA here, below everything except for those longer term EMAs sitting down around that 184 and 183 areas. So this does look a little bit more bearish here now. It's still right at my level, 186.81, but it is below that after hours. So it looks like we're going to get a little bit more breakdown tomorrow. And then looking at Tesla, similar thesis, did throw a little bit of a breath higher and then sold off throughout the session. We're at that 21 EMA. It took out my level here at 188.50. So if you were trading this, you got in at that break, didn't quite get that price target, 197.75, and then it sold off all the way to your break even here if you were trading this based on my system, and then hit the 21 EMA. If that breaks, then you're looking for a move down to that 177.70 area. Momentum looks bearish, RSI looks bearish, and I would expect that to follow through. Again, being patient at that 21 EMA. It is below it after hours. It is 187.91 for the 21, and we're at 187.88 or 83 right now. So seems like more sell-off is in the cards for tomorrow. Moving over to Pepsi and NVDA, following up on that Pepsi earnings and then follow-up day here. So Pepsi earnings, you can see it was down 3.5%, and then the following day was 1.75% to the upside, back above the trend line, ended up holding support here at 167.47. And this looks a lot stronger, pretty tight risk reward at 169.76. Honestly, I would expect this to continue to break higher to that next trend line up around 174.50 or so. And then my next level, 176.75. So definitely a low, higher low setup, starting to bounce. I would expect this to follow through. And then looking at NVIDIA, we finally saw a little bit of weakness. It's been basically straight up. We threw a big wick, getting all the way up to 746.11. So a massive move to that peak. And then we pulled back all the way down to 722.48. And now we're down a little bit more after hours. Let's look at that on the hourly chart, and you can see it here. Similar to everything else, big wick higher, sold off, and after hours we are lower than yesterday's close. Still just above this trend line, so it's still hanging in there, but momentum bearish, RSI bearish. Again, NVIDIA is a very, very strong stock, so I wouldn't look to short it or anything, but it is something to keep an eye on if it gets below this trend line here. To Microsoft and Amazon, you can see Microsoft pulled back on the day as well, 1.26% to the downside, engulfed the previous candle. Not a great indicator there. It looks like we're going to break down. You can see that rally up to the SMA on RSI, and we've broken down from that level, so that's a little bit bearish. And then looking at Amazon, similar thesis, rallied up on Friday, hit that level, 174.23, overthrew it a little bit, and then broke back down. Didn't fully engulf, but it is down after hours. Got the 9 EMA sitting at 168.10, just above my support here at 167.06, so definitely worth watching. If it breaks below the SMA on RSI, that could be interesting. But across the board, we're seeing a little bit of weakness in the biggest stocks in the world. Moving over to staples and discretionaries, staples actually held in there pretty well. Bounced off of that 21 EMA after dipping low early in the session. You can see that here, and then we rallied up, finishing up positive above the previous candle, so fully engulfed to the bull side, 0.71. Looks pretty good. Again, watching that 74 level, we interacted with it here early in February and then broke down. We're finding some support. You need to see it break higher above that level. Let's look at it on the hourly chart. You can see that dip low early in the session, then that rally up into the end of session. So that looks pretty good, right at that 55 EMA. If that breaks, again, $74 there. And then you got discretionary, threw a big wick, tried to get above 180.10, broke back below it here, and we're selling off after hours as well, down another 50 cents. Momentum, I would expect that to step down tomorrow, but it was basically flat between today and the Friday session. And then if it breaks below this shorter term support at 178.47, then I would expect a move lower into that 174.76 area. Moving over to transports and industrials, you can see transports pulled back on the day, down 0.41%, momentum rolling over, RSI rolling over right at resistance. 170.90 didn't quite get tested yet, but I would expect it to get tested tomorrow and then see that bigger breakdown to that 9 EMA at 267.45. And then looking at industrials, ended up positive on the day, 0.15, through a wick, rejected just like everything else, but not as weak as some of the others. It's still held up at VWAP, and it is rallying a little bit after hours. If it pushes to the trend line, that would be up around 117.82. Moving over to 20 and 50-day breadth. We talked about it on the fear and greed charts, but we did see a slight pop in breadth. And you can see that here, rallied up, held that 9 EMA, pushed to the 55. Still just below it, still got an initial test there, but this could absolutely get a continuation back up to that 85, 86 area, just like we were in here previously. If it gets into that zone, that might be the end of this rally. That is typically the top for the 20-day breadth, but keep in mind that it can hang out in that level for a while. We got into that zone in mid-November, and then we broke down from that zone at the beginning of January. So can hang out there for about a month and a half. It's not unusual. Not always that long, but it can do it. And then looking at 50-day breadth, you can see another step up. We'd been throwing spikes to the downside, held up, and then you got a candle higher here. Question is, what happens next? Do we hit this 21 EMA and break back from that level? This is clearly a downtrend in the short term, but we're getting into those longer term levels. And right now it's held. It's getting a bit of a bounce, momentum looking higher, RSI looking higher. Looks like we might see a bit of a bounce. It's interesting to see those longer term breadth charts showing some strength, especially with the weakness across big tech that we're seeing right now. Moving over to yields, you can see they were basically flat on the day, waiting for that CPI data, hovering right at that 4.5 level here on the 2-year. Similarly at the trend at 4.18, just below it on the 10-year. It is interesting that momentum on both of these continues to roll down just a little bit. But like I said, CPI is going to dictate the direction. If this starts to break out, that could be a little bit bearish for markets. So keeping an eye on this and the CPI data tomorrow. Moving over to 200-day breadth. I don't usually do this in every video, but you can see here we did get a really nice spike up. Got back above 96.38 after closing below it on the Friday session. Strong move above this trend line as well. We're back above all the EMAs and SMAs. Momentum's been rolling to the bull side, RSI breaking out here. So it does look like the longer term breadth charts are showing a little bit of strength here. So that's interesting to see. Again, all of the breadth charts were a little bit positive, which is interesting considering that most of big tech and the SPY and the NASDAQ were both bearish on the day. Moving over to the dollar. basically neutral here. It's been neutral for a couple days in a row. You can see 4 candles in a row hovering right above that 144 EMA. We did test it again, did find some support. You can see we touched that 200 SMA here on the hourly chart as well. So you could argue just a little bit bullish, momentum fading on the daily chart, still hovering here on RSI, just standing by for that CPI data tomorrow, and that'll definitely dictate direction. Moving over to bonds, same thesis as pretty much everything else. Sideways chop, same as yields. Continuing to hold in this zone for J&K, and then looking at TLT, slightly positive, but still in that same zone, right at the highly traded zone. Waiting for CPI. If CPI comes in hot, then you should expect to see yields going a little bit higher, and that would send bonds lower, or the inverse is certainly possible. Moving over to the MOVE Index and the VIX, you can see both of these were bullish on the day. Momentum bullish, RSI bullish on both. But look at that pop on the VIX, quite a bit stronger than the MOVE Index. We were talking about this level holding here at 1275 as a higher low from this previous low here. And sure enough, we got a continuation higher on the Monday session. We closed on the high back above these trend lines. So that's quite bullish. Let's go ahead and extend this out. That would give you a price target of around 1430, 1440, just below my 1470 level. And then above that, I have these longer term trends up around 1650. That's what I was watching for this previous spike. We didn't quite get there, but if this breaks here, then you would expect it to push to that level. So keeping an eye on this, could be just a little bit of a spike going into the big news release, and then it could taper off from there. But if the news release is bad, then we could absolutely see a spike into that zone. So keeping an eye on this, the VIX showing some strength into the close, closing on the high, indicating some weakness in markets to come. Moving over to my accounts, you can see I did finally adjust my position into a TQQs just to stop using so much margin on my main account. In terms of notional value, this is basically the same. It's actually a little bit less than my previous position. I had 400 shares of the QQQs, which are trading around $436 per share. And now you can see I have 900 shares of the TQQs hovering around that $60 price mark. So if you do the math, this is triple levered plus times the 900 shares. So 3 times the 900 times the price value actually gives you a notional value of around 160,000. So it's a little bit less than my previous position. And then I did sell the 45-day calls against it. So it's effectively the same position, if not a little bit smaller than the previous one. So probably good on the day considering that markets were down, and they are down a little bit more after hours. You can see we closed at 56, we're down to around 22. And then I did get $8 on those covered calls. So in terms of potential profit on this position, it's about the same, $1,800 to $1,900 over the next 2 weeks. And then I'm still pretty well protected down to that $54 call strike. And then if you factor in the credits, that would put my break even down at $46. So plenty of protection, $46, well below current prices. And if we close above $54 in 6 weeks, then I get to keep that $800. So everything works out. And you can see on this position here, I am back into the positive for cash. So I'm not borrowing any money. And look at that pending margin interest. Because I held that QQQs position for so long, I'm going to end up paying about $600 in margin interest. And that's why I adjusted over here to the TQQQs. Like I said, in terms of notional value, it is effectively the same position. And then looking at the IWM here, I did roll this up and out as it was super bullish to 196 for $12.45 credit. So that puts my max profit here at 208.45. So that would give me a couple of more dollars of upside potential. This looked really strong. Price targets up around 208, 209, at least in the short term. And this is a long time to wait for it, but $12 credit on $196 position. That's about a 6 to 6.5% return over 2 months. So that's not too bad. And if it continues to break out, I can always be patient here and roll to the next strike as they start to roll out over the next few weeks. But right now, this is about as far out as I want to go. And I think I did have to pay a little bit of a credit to do it as well, which is not great. It's also worth noting that I closed my put positions on the TQQQs for my Roth IRA. As it started to look a little bit weaker, I took off that position, was able to keep some of those profits. I did not reestablish it as it looked weak going into the end of the day. So being patient there on that second position in my IRA. I just have that covered call because the strike is still down here at 58 for $3.60 credit. So I might make an adjustment on this tomorrow, just continuing to watch it going into CPI data. Let me know down in the comments section what you think of the markets. Is this pullback the start of something bigger, or is it just a little bit of hesitancy going into that CPI data? Definitely let me know. And like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.